In a world full of headlines, some stories are too complex, too uncomfortable, or just too controversial to ignore. Welcome to Controversial Corner, where we uncover the truth behind the tension and dig into the debates that shape our world. Every story has more than one side. We're here to explore all of them. This is Controversial Corner, where truth isn't always comfortable, but it's necessary. Hit that subscribe button, and let's challenge the narrative together. Insurance is the promise you pay for but hope to never use. It's the invisible safety net beneath your car, your health, your home, your life. But what happens when the very system built to protect you becomes a machine that profits from your vulnerability, delays your lifeline, and manipulates your misfortune? From denied claims to catastrophic disasters, insurance is not just about risk management, it's about power, paperwork, and profit. This is Controversial Corner, and today we're unpacking 10 deeply controversial moments in insurance, where lives were upended not by accidents, but by systems that were supposed to soften the fall. 1. Fine print nightmares, the hidden clauses that betrayed trust. Insurance contracts are often unreadable mazes of legal jargon, deliberately dense, carefully phrased to limit liability. People pay premiums for years, then discover that act of God, pre-existing condition, or not in network meant denial, delay, or dismissal. From health coverage rejections to home claims voided over obscure exclusions, the small print has quietly crushed big expectations. When legal language becomes a weapon, protection turns into a trap, and trust becomes collateral damage. 2. Denied coverage for life-saving treatment. Across the globe, there are stories of people with valid insurance being denied coverage for urgent, even life-saving procedures. Why? Because the treatment is experimental, not medically necessary, or exceeds plan limitations. Families go bankrupt trying to fund what insurance promised to cover. And behind each denial is often not a doctor, but a corporate policy manager with quotas to meet. When saving costs outweighs saving lives, is it still healthcare or a profit model dressed in empathy? 3. Natural disasters versus covered events. After floods, fires, hurricanes, or earthquakes, survivors often turn to insurance with hope, only to be told they weren't covered for that kind of water damage, or the storm didn't meet the wind speed threshold. Entire neighborhoods left in ruins while insurers argue over definitions. In many countries, climate change escalates these disasters, but insurance companies quietly recalibrate what they consider reasonable risk, then raise rates, shrink coverage, or pull out entirely. What happens when the safety net evaporates the moment it's needed most? 4. Car insurance bias, when your zip code drives your premium. Two people, same car, same record, but different neighborhoods. One pays double. Why? Because zip code, not just driving behavior, drives auto insurance rates. In many urban areas, this disproportionately affects minority communities, reinforcing systemic inequality. Algorithms claim objectivity but often amplify bias hidden in the data. Insurance becomes not just risk-based, but location-based punishment for historical neglect. Is that protection or digital redlining? 5. Employer-linked health insurance and job lock. In systems where health insurance is tied to employment, losing a job often means losing access to vital treatment, turning unemployment into a health crisis. People stay in toxic jobs to keep coverage, delay medical care due to copays, or avoid starting businesses because premiums become unaffordable. Insurance becomes a leash disguised as a benefit. When coverage depends on capitalism, how free are your choices really? 6. The pre-existing condition scandal. Before reforms in some regions, having a pre-existing condition meant you could be denied health insurance altogether, or charged astronomical rates. People were punished for being sick, for surviving cancer, for having chronic conditions. Some insurers defined conditions so broadly that pregnancy, migraines, or mental health diagnoses became disqualifiers. And even now, Loopholes and policy rollbacks threaten to revive this discriminatory logic. Is it protection or privilege access rationed by past pain? 7. Posthumous denials. When life insurance betrays families. You pay life insurance to secure your family's future, but countless families discover, in the worst moment, that death isn't enough. Claims are denied due to minor paperwork errors, misrepresentation on decades-old applications, or delayed autopsy reports. Some insurers delay just long enough for grieving families to give up or settle for less. When death becomes just another opportunity for fine print to surface, what was the point of all the premiums? 8. Risk scoring and algorithmic discrimination. Modern insurance relies heavily on algorithms that assess your risk profile, a digital fingerprint of health habits, lifestyle, credit score, income, location, and more. But these models often mirror existing biases. Those with lower income or less education get higher premiums, even if they're healthier. Risk becomes a reflection of societal inequality, masked as math. When an algorithm decides your worth before you even file a claim, can fairness really survive automation? 9. Travel insurance and the pandemic exclusions. When the global pandemic hit, millions tried to claim trip insurance, only to discover that most policies excluded pandemics entirely. Hotels shut down, flights canceled, lives disrupted. But insurers called it force majeure and walked away. Policies didn't evolve fast enough, leaving customers stranded both literally and financially. The lesson: what feels like protection often has an asterisk, especially when global catastrophe knocks. 10. Profit over people, the corporate conflict of interest. At the core of insurance lies a paradox: insurers make money when they don't pay claims. This inherent conflict of interest pits their survival against yours. Entire departments exist to reduce payouts. Executives are rewarded not for approval rates, but for cost savings. This isn't illegal, it's the business model. So when you ask, why is my claim delayed? The answer might be disturbingly simple: because it's profitable. Insurance is supposed to be the backstop, the parachute, the safety line, the whisper of you'll be okay in times of chaos. But too often, it's become a contract built to protect the insurer more than the insured. It sells peace of mind, but often delivers stress, confusion, and betrayal. This isn't just about claims, it's about power, opacity, and a growing gap between those who can access protection and those left exposed. True security can't be bought if the product only works for those who don't need it most. This has been Controversial Corner, where we unpack systems dressed as solutions. Subscribe, hit the bell, and comment below. Have you ever been denied a claim you thought was guaranteed? Let's expose what's hidden and demand what's fair. Thank you for watching. If you found this documentary insightful, don't forget to like, share, and subscribe for more content on technology, business, lifestyle, health, society, and global issues. What are your thoughts on these controversial moments? Let us know in the comments below. Stay tuned, and we'll see you in the next video.